Okay, so as always, feel free to ask questions. Anytime you like, ask questions in the question box. Just type it in, and we'll go ahead and answer in the order in which it was received. So with that said, let's go ahead and get started with this webinar here. Okay, I'm looking at the S&P 500 on the daily view, and kind of looking back in the whole year, it's been a very choppy year. Other than the nice up move we had in the first few months of the year, basically the rest of the time it's been a whole lot of choppiness, and then big drop, and then again a whole lot of choppiness. So you can see this entire year of 2011 has been nothing but a lot of side trending, a lot of choppiness, which made for very difficult trading, if I had to say so myself. And a lot of unexpected moves, a lot of gap ups, gap downs, and it's a very news-driven type of event and a news-driven market. That's really what it is, and especially with everything that's going on in Europe, that's really just kind of pushing the market up and making these horrendous gap ups, 3% up, 3% downs. So it was very difficult to hold anything long term in that sense. Okay, let's kind of go out into a weekly view just to get a sense of what's going on with the whole market on a long-term perspective. And I will be repeating some of the stuff I said in the past seminar or webinars, but I think it's worth mentioning that we showed a head and shoulders pattern right there, and that kind of marked the top for this market for the time being, at least. Very similar to this head and shoulders that was formed here, but on a grander scale. I also mentioned that we have one big head and shoulders that's forming also on here. You have the left shoulder, the head, and then the right shoulder. Basically, that's where we are in the process of forming that right shoulder. And I guess that kind of explains the choppiness, because the shoulder part is usually where the choppiness occurs, like here and like here, and then the top, that's where also the choppiness occurs. So it kind of makes sense if we are forming this one big head and shoulders. It kind of explains why we are experiencing such choppy conditions right now because of that. So, whether or not this neckline will break, obviously that's anybody's guess. But I think a lot of people are expecting some more downside for this market, given the whole economy and everything that's going on in Europe. So I think a lot of people have some sense of bearishness that's forming for this market. But if also we can, on a bullish scale, if we can get back above this area, shoot back above this neckline right here, then maybe that's a different story. All right, just like how it failed back here in 07, 08, retested the neckline and just failed from that point on. We had the same thing happening where it just retested this neckline and it just kind of failed from that point on. Now we're still chopping around here a bit, but I think if we get either a decisive break of this neckline, this big neckline, or if the market can retake back this broken trend line right here, then we'll have a better idea of what's going on. Now, what's interesting is, going into like using Bollinger Bands. If you guys are familiar with Bollinger Bands, whenever the bands are tight, that basically indicates that the market is in low volatility stages, right? Basically, it's side trending like this. But when you start seeing the bands expand like that, that tells you the market's ready to move. And right now, you can see the bands are going into this contraction tight stage where the market is choppy. It's not really making a whole lot of ups and downs. And it's telling me that it's ready to start expanding once again, because the markets always alternate between this period of movement and rest and movement and rest. So once it's done resting like it did here, then it'll be ready to expand either up or down. We just don't know. Okay, so and also for our members, right? You guys understand the volatility squeeze concept. So it's also going into a volatility squeeze, right? So that means the market is getting into this period where it was in a squeeze before, just like here. So that means once it breaks out of that squeeze, it's going to get ready to move. So right now we are going into that period of contraction, and once it gets ready to move, then that'll tell us there's going to be some big movements coming up. Okay, so most likely after we get through this year, I don't know when in next year, but once we get through this year, I have a feeling that we're going to experience some big movements coming up. And whether it's to the up or downside, I don't really know. Okay, but once we figure out which way the markets decides to move, it'll tell us, right? I mean, we'll figure it out once it starts breaking support, once it starts making these moves, then we'll know exactly where the market wants to go. So even from a daily point of view, you can see this triangle that it's forming, or some kind of big triangle consolidation pattern. So in other words, the market is just resting. We were hoping for some kind of end of year rally, and the basically end of year is just what, two weeks away. So if the market needs to rally now before it's too late. Otherwise, there's the chance of an end of year rally is basically out the door. And so that's really what I see for the market is just if the market doesn't move by the end of the year, we're just going to get a lot of choppiness. And when it comes to choppiness, it's not fun to trade choppiness. Going into the VIX, this is the fear indicator. What's interesting recently is that the VIX is actually drifting lower. So even though the market has pulled back, the VIX is also pulling back, which is interesting to say the least. It's telling me even though the market is pulling back recently within the last several weeks or a couple of weeks, there's not a whole lot of fear that's going on. Maybe people aren't really trading, or maybe the people are just kind of complacent in that sense. But one thing I do want to pay attention to, if the VIX does continue to drift lower back down to these levels, I'll be very cautious, because that tells us the market is getting too complacent. The VIX is too low. All right, so when the VIX is too low, that's usually a sign that the market is getting too complacent to the long side. So I'll be very cautious. Just like how when the VIX is very high, I'll be very cautious going short. When the VIX is too low, I'll be very cautious going long. So right now we are drifting lower on the fear meter. Not a whole lot of fear going on out there. So it's telling me something fishy is going on, where we're seeing this divergence. Because normally when the market drops, we should see the VIX spike up or go up, but it's not doing that. So something's going on. I can't really put my finger on it, but all I know is that I'm watching the VIX to see what else is going on. But going to other indices, if we look at the Dow Jones is actually one of the few indices that's actually holding up the best. You can see it's still holding above this 50-day moving average. And then if we go into the others, like the Russell and then the NASDAQ is getting beaten up pretty badly. So tech stocks are actually kind of weak right now, whereas the blue chips are actually relatively strong compared to the tech stocks. So that kind of tells you something, right? People are fleeing to safety stocks, the well-known big companies that will basically stay around for quite some time, as opposed to the more speculative small tech stocks. So that's also a clue as to tell you where the money is going. What do you think, Chris? What do you have? Anything to add?
Sure. Can we go into a 5-year weekly view for the S&P 500?
Sure.
And just for the upcoming week, if we look at what happened this week, we had a black candle and it wrapped around the prior white candle. So we actually did have a bearish engulf pattern. See, the thing is about this market, it's so choppy, things like that. It's kind of hard to call direction, but when we see a lot of candlestick signals that pop up, they usually give us an indication that something's up. So if we see some follow through next week to this bearish engulf pattern, then the chances of an end of the year rally are going to get even more slim. If we go into the daily view,
actually, I'm going to add on to what you said, bearish engulf,
sure.
And it seems like it's a very popular pattern on a weekly view, where we have a bearish engulf there that marked the top. We also have a bearish engulf that marked this top. Well, to be technically, it's a dark cloud cover, but I'm not going to get too technical on that, right? Another bearish engulf there. Okay, so it seems like these bearish engulfing patterns are very common, marking tops as far as calling tops for the market. So it seems like that's a very typical pattern. And usually, when it comes to candlesticks, You don't have to know, like hundreds of candlesticks like Chris does, right? But what we always stress is just keep it simple and look at these common patterns like bearish engulfs, bullish engulfs, hammers. Those are the very common patterns that just seems to pop up every single time. So I would pay attention every time if the market does rally and it flashes some kind of a bearish engulf pattern. I would definitely pay attention to that on the weekly view at least. Okay, so daily view you said?
Okay. And the level that I'm looking at, if for more follow through of the bearish engulf pattern, is at 1210. And this is where the market stalled, I believe, on Wednesday and Thursday. So if 1210 is broken to the downside, then I will definitely expect more selling pressure to come in and take place. Also correlating with that is on the daily view of the Dow Jones Industrial Average, and that's correlated around the 11,800 level. Now it's also the Dow's also holding above its 50-day exponential moving average too. And if I see that the Dow breaks under that 50-day exponential moving average, 11,800, we're going to see more selling come into them, and then that's what I'll also be expecting to happen within the Russell and the NASDAQ.
Yeah, what's interesting about the Dow is if we do get that breakdown, this could also be that like a double top kind of formation that's going on. So a lot of things, just like here, where it kind of flashed this little double top right there, very similar patterns. And you know what? Patterns do repeat themselves, and that's why patterns work, and that's why technical analysis works, because patterns do repeat, right? They might not always look the same, okay? And that's something you have to realize is head and shoulders will probably not look the same head and shoulders from one stock to another. But once you're able to see that or recognize a certain head and shoulders that pop up, then you know that, okay, that there's a potential top for this market, or a double top in this case for the Dow. So a lot of things, when it comes to trading, it's never textbook. But once you're able to recognize pattern, and that's really what trading is all about, just pattern recognition, to be honest. If you're able to spot triangles, you're able to spot certain candlestick patterns. That's all you really need to know. Once you're able to pick up these patterns and train your eyes, then that's it, right? Once you recognize it, you act upon those patterns and put a buy trigger, put a stop trigger, and that's it. Let it ride. And that's really what it is when it comes to trading. And one of the things that how I got started and how I got when it comes to trading is just looking at charts on a daily basis for a good hour or two, and just cycling through a list of charts, hundreds of charts, and just trying to find the patterns, trying to find head and shoulder patterns. Sometimes you have to kind of go back, right, a few years, just to, not to predict, but just to look at patterns itself. Right here, not exactly classic looking, but you can see this is a head and shoulders pattern right there, okay? Right, a classic retest of the neckline as well. So these patterns that pop up, they do pop up, but it's never the same looking pattern. Otherwise, they'll be too easy, okay? Otherwise, trading would just be a walk in the park, and of course, then that doesn't make it fun, right? We got to make it at least a little challenging. But in any case, start looking at patterns. If you are new to trading, that's one advice I can give to you guys, is just keep looking at charts day in and day out, hours and hours. If you're working during your lunch break or whatever, just look at a few charts, just take a look at it, try to look at certain patterns, and just go from there. Once you train your eyes, okay, once your eyes get adjusted to looking for patterns, then it becomes a little easier. I know at first it just kind of looks like noise and scribbles on the in front of you, but once you get used to it, then you know what you're looking at. There's a learning curve that has to be learned in order for you guys to adjust. So when it comes to this year, there's also a few things that we have to adjust in our trading style to accommodate this whole choppy market. One of the main things when it comes to trading the choppy market is being able to take profit when you have it. In other words, rather than letting a stock ride like how we did back in the last couple of years or early in late 2010, 2011, rather than letting it ride, you have to be able to have shorter targets, meaning that instead of aiming for a $5 target, for example, you're probably just going to aim for a $1 or $2, okay? and always be able to move your stop closer. Because especially in a choppy market, you don't want to give too much room when it comes to trading because it's going to have these big swings, right? Right. So once you get stopped out, you're out. You never want to jump back in until there's another setup. So one of the things that we've been doing is just aiming for short targets. For example, like SIMO, normally in a healthy market, I would definitely aim for a higher target other than 21. But because the market has just been so choppy, we decided to at least take some profit at 21 and move our stop basically to the entry level. So if we do get stopped out, the remaining portion of your position, at least it won't lose, right? Basically, the remaining portion is going to break even, whereas the other half that you took profit, that's profit that's in your pocket already. So stocks that have normally that can run, they don't run as well, right? And same thing with this one where we shorted this stock. We shorted this stock a couple of days ago, right around here when it broke here. We shorted, was that Wednesday? Hit our first target at 51, so we said, hey, no questions asked. Target hit, got to take some profit, move our stop at least, not exactly to entry at that for this particular position, but at least close to our entry point where, okay, we did get stopped out for the remaining portion on Friday, but it's not as bad as getting your entire position stopped out, right? At least you took a little bit here, maybe half, I don't know, depending on your trading style, maybe you took half here, and the other half it got stopped out. So at least in the overall net position, you still managed to come out with some gains. So that's really what we've been doing with the market, is just getting almost short-term day trading, you can say, right? I mean, it's really hard to let things run unless you have the stomach to let it ride out the volatility. But for the most part, we've just been really diligent in just taking profit and keeping our tight stop. But hopefully, when it comes to this choppiness in the market, this too will end. All right, the market can't be stuck in this choppiness forever. Okay, eventually it will has to make a move. It will have to make a move. So we just got to figure out. We just got to tough out this time period for the time being. And you know what? Trading in a choppy market, it actually sharpens your skills, believe it or not, because in a trending market, when the market is trending either up or down, there's a direction, right? It's going up or it's going down. There's a direction. But when it's directionless, that's when you have to be very sharp and very, I guess, meticulous in your trading skills to be able to at least take some profit or make some profit in this market. And that kind of sharpens your skills, to be honest. And I think it's great that we have opportunities like this where the market is just so choppy and difficult, because that's where you actually learn how to trade, how to tighten your stops, how to sharpen your setups. Okay, because otherwise you can just buy something. If it's a bull market, just buy something and just let it ride, right? There's no fun, there's no learning curve to that, nothing to really learn, so to speak. But this is where you really get to learn in this type of tough environment.
June, we have a couple questions.
Yeah.
The first one is, for a novice, which software or where is the best place to train yourself to become better at recognizing patterns?
For software, let me see. You know what? I think when it comes to free software, all right. First of all, obviously you want to look for free software. What I normally do is I always tell people to sign up for Thinkorswim, and you can get this chart for free, believe it or not. You don't have to deposit into the trading account. Now, if you don't want to open a trading account, I believe there's a website called Free Stock Charts. Yeah, if you go to this website, it's freestockcharts.com. It's a free chart. Okay, so once you go on it, you don't have to sign up for accounts. You don't have to do deposit money or anything. But yeah, that's this website right here, freestockcharts.com. That's also a good place to at least basically have access into a charting system for free. But if you want what I'm using, this is the profit charts. I use the Thinkorswim profit charts. Again, right? You just sign up for the account. Don't need to worry about depositing money in there, and just use the charts for free. And as far as chart patterns, start picking up a book. To be honest, that's really where you can start doing is pick up some books on chart. If you need some recommendations, we can make some recommendations as far as which books to start looking at. But once you start looking at certain books, and okay, you see what you read in the books, and then you apply it into the charts, and that's where that's how I started, at least, by start reading some books, looking at patterns, and then applying it into real time for chart recognitions, right? Like here, you can see this triangle right there, right? Normally, it's hard to see it, but once you're able to see it, then it becomes clear. I hope that helps. Okay. Anyway, going on, I think another thing is if you guys trade options, I think selling options is also a good strategy, a great strategy when it comes to choppy markets, because the market is kind of stuck in this range, right? So if, let's say, you sold bear call spread somewhere up here, then you should be fine. Or if you sold bull put spread somewhere down here, then you should be fine. But realize eventually the market will get out of this range, and once it does, then I would stop selling spreads, okay? Especially to whichever direction it's falling towards. But normally what we've been doing is just recommending spreads on strong stocks, bull put spreads on strong stocks, and bear call spreads on weak stocks. Okay, and that's really what we're doing, because the market, even though it's choppy, there are stocks that are trending, right? There are stocks that's trending up, and there are stocks that are trending down. And collectively, that's really what makes up the market, and that's why it's so choppy, because let's say, half the stocks are trending down, half the stocks are trending up. So when you put those together, you get the S&P that's just kind of flat for the most part. So here, we said sell some bear call spreads. We've been selling bear call spreads actually on Amazon along the way as it makes its leg lower and lower. So, that's one thing you can do if you don't want to participate in trying to call direction. Just sell some spreads. Sell it out of harm's way, right? I don't recommend selling too close, but you sell it out of harm's way, out of above a certain resistance level for a bear call spread, or below a certain support level for a bull put spread, right? I don't care if Amazon does, goes up and down, right? As long as you can just sell it somewhere safe, let it expire. And weeklies, I really recommend selling weeklies because, first of all, you're not holding for that long. You're not holding for a whole entire month. And especially in this market, things can turn around easily. That's why when it comes to selling spreads, I really like the fact that they have weeklies now. You can just hold it for a good week or so, and that's it. You don't have to worry too much. And you're not exposed. You're not as exposed to the market when you're only selling for that short amount of time. But that's also another thing. Is what's interesting is a lot of these leading stocks, the stocks that have led the market for the last couple of years, are actually breaking down. Like Amazon's the classic one where we keep talking about Amazon, where it's now trading underneath its 50-week moving average. And now we're starting to see lower lows and lower highs. So these leaders are starting to break down, like Win. Okay, these are stocks that I'm looking at to short because they've led the market. When a stock has led the market and now it's weak, there's going to be a lot of downside for it to drop, because there's still this entire space for it to move down. So the potential for it to drop is there, right? The other one I'm looking at is also Baidu, where again, right, this is a leader back in 2009, 2010, and then right around here, you can see this kind of a head and shoulders pattern that's kind of formed. And so a lot of these stocks are starting to break down. Salesforce that's actually a very weak stock also. Another head and shoulders pattern that you see right there, okay? Right, notice how they're not exactly the same looking head and shoulders, but a head and shoulders is a head and shoulders, right? And here's the neckline for this pattern. So, right, there's a lot of downside potential for these kind of stocks. And we've seen stocks where, where they were once leaders and they just kind of dropped, like Dry Ship. See, it was once a leader back in 2007. I mean, look at where it's at now. $2, right? LDK. A lot of these solar stocks that once were leaders in the market back in '07. Right? Look at where it's now. Same thing with First Solar. Okay, where before the whole market tanked, now it's down to 31. So a lot of these stocks that were once leaders. Okay, same thing with GMCR. Okay, notice how there's a lot of potential for it to form. Another example is Netflix, right? A leader back then, now it's definitely a lagger. So I like to short these stocks. Okay, if the market does turn around and start heading lower, I like to look for these leading stocks in the past year or so. And if I see some kind of topping process, okay, like Apple, where it's also showing a head and shoulders right there, I think that these things can really drop big time, okay, compared to stocks like Bank of America. I mean, yes, it's still shortable, but this thing has been down for quite some time already. So you have to ask yourself, just how much more can it go? Maybe $2, $3? Sure, you can make an easy buck or two. But I like to look for these big guys that hasn't exactly fallen yet, but are showing signs of top. And I like to get in on these and basically ride up to the downside because there's a lot more that these stocks can drop. And that's also something that another reason why I like to pick these big stocks is because they were once institutional holdings, right? A lot of institutions held on to Apple, Amazon, these big stocks. So they're going to have a lot of positions they need to liquidate if the market does, tank. So that's why, and plus not to mention that Apple is a household name. Everyone is holding. I'm sure everyone's grandma is holding Apple in their Roth IRA. So you know that a lot of people are holding on to this stock. So once the panic selling does kick in, it's really gonna have that snowball effect, and which leads me to talk about gold here. And gold is something I mentioned to you guys before, and I think gold is starting to show that it's changing trend right there. You can see. I mean, what did I say before? To always pay attention to gold, GLD at least, and notice how it's always been able to stay above its 20-week moving average. And never once did it fall back to its 50-week moving average ever since it started trending. But guess where it's at now, right? It's back to its 50-week moving average, broke down on its 20-week on high volume. Okay, so it's telling me that the gold is starting to go into some kind of a downtrend, especially now that you're starting to see this lower lows and lower highs, and also, right? This was a classic capitulation top, a blow-off top, right? When it goes vertical on high volume, you got to pay attention to these things because these are clues, right? These are clues the market's telling you that, hey, this is some very similar to what happened with silver, right? These kind of blow-off tops where things just kind of skyrocket and hits high volume, sells off, gets some kind of a weak bounce, and then just kind of drifts lower from there. And you can see if you look at this and you go back to gold, okay, very similar patterns that's forming. Internet's a little bit slow. Okay, blow off top, drops, weak bounce, now it's starting to drift lower. All right, so same type of pattern we're seeing now with gold that has developed with silver. Right, so if I would be very cautious again holding on to gold. I don't have a position in gold, so I can say this without any sort of biasness. But if you have a long-term perspective on gold, you got to ask yourself, are you willing to stomach a potential drop in gold? Right? Are you able to do that? Are you able to be okay with that? If you are, then fine, But if not, then consider either hedging your positions by, I don't know, cover calls, or maybe buying some puts to at least try to hedge, or maybe start considering shaving some positions off. Okay, but definitely I would not consider going into gold right now. It looks like it's changing trend, so I wouldn't consider this like a buying opportunity, so to speak. I would be very cautious into buying gold right now. Okay, and that's also something that if gold really does tank, okay, I'm not saying it will, but if it really does tank, you have to understand that a lot of people are holding on to gold, right? Okay, so if it does tank and it starts to drop fast, it's going to get that panic selling that's going to kick in. Okay, and once that panic sells kick in, it's going to drop even faster, kind of like the snowball effect. All right, so that's my take on gold. Chris, you have what do you have for us?
Excuse me. Actually, there's not a lot that I'm looking at, but one thing that I am.
Hello? I think he lagged out. Can you guys still hear me? I don't know if I'm still on.
I can hear
Oh, okay, okay. There you are.
him. Excuse me about that. One stock that I'm taking a look at is FOSL.
Okay.
Taking a look at this from the for a downside, for a breakdown of the prior support that's been holding for the last 3 days or so, and it was a prior support too. So if that thing does break, I'll be taking a shot at it from the downside. Um,
Actually,
Another
this
stock
this
that,
this is also a good example of a stock that was once a leader. Good thing you mentioned this, right? I mean, look at this thing, right? And now it's falling, it's lagging the market, and yeah, definitely. I would say if it breaks down from support, this would be a great stock to short because it has a lot more downside to go for this particular stock. All right,
you
sorry
know,
about that.
another, yeah, it's no problem. Another stock that I had on my watch list was ROK. And this was another great example of when I'm keeping stocks on my watch list, I to filter things out. And I previously, when it had made a nice run up to $77.50, it looked like it was ready for a really nice breakout. So I kept this on my watch list and said, it looks pretty strong or decent compared to the market because the market's been chopping around. And if it gets above that $77.50, it's going to continue to move up higher. And actually what ended up happening is this stock did not get above 77.50 and actually ended up pulling back. So what I had to do was actually take this stock off of my bullish watch list because it was more or less started to follow within the market. So it's just another example of going with the best stocks that you can, and if you have some stocks that you're looking at, you want to set some goals for that stock to do before you take the trade. This goal was to get above 77.5. If it does that, then I'll be in it. But it didn't really qualify itself to me for that, so I had to take it off my watch list. Another example, TRMB. I've been talking about this for the past week or maybe even 2 weeks. And this thing also had a very nice run up, and resistance was right at $45. And I have this on my bullish watch list and said, this thing looks pretty good compared to the overall market, which was chopping around. If it gets above 45, I'm going to take this from the long side. And it actually didn't do that. It ended up fading back down. So I had to take this off of my watch list because my setup for this was it was going to be a breakout type of setup. Gets above 45, I'm going in. And it didn't break out. So, and it ended up pulling back. Now, a lot of people can argue and say, hey, it did pull back to its 20. Maybe you want to take some shares and maybe for a bounce up to 45. But for me and the way that I've been trading and I like to reduce a lot of risk, especially when exposure when I have in the markets, was my whole thing was this stock was going to break out. And when it didn't act like it was supposed to, then I had to turn around and go look for other stocks and actually take this off of my breakout list. That's just the way that I trade, and the stock just didn't do what I wanted it to do. So I didn't go in.
Yeah, and that's really how we should play the market because the market is just so volatile, and you never want to go in early, especially nowadays. Like normally before, let's say if I were to trade this stock here, I would at least take a small position before the breakout because normally when the market is trending higher, it tends to break out easily. But nowadays the market has, even though it's setting up, it has a lot of false setups where okay, instead of breaking out, it actually breaks down. So I'm being very cautious, even entering before the breakout, which is something I would normally do beforehand in a different market. But now I would definitely wait for that breakout first before going in. And even if I do get in on the breakout, I go in like half the positions because I notice nowadays a lot of breakouts tend not to hold. A classic example was when we were trading GNC. It did break out, but it easily falls back under and stops us out. and I don't like that. I don't like that feeling. So that's why, like, okay, and these are things you have to realize that even though the stock does break out, it can easily fall back in. Like TSCO, where it triggered us in right here, right? I mean, right here it looks great, right? It looks great, nice breakout, about to move up, but the next few days it just faded back down. So a lot of breakouts are not holding, right? And these are things you have to pick up. Okay, breakouts aren't holding, so that means I shouldn't buy too many shares if it does break out because it tends to fall back down. So you have to be able to adjust how you trade. You don't always want to just do the same thing over and over. You have to be able to adjust to the market. If the market's showing a lot of false breakout, either A, don't buy on the breakout, or B, if you do buy on the breakout, don't buy so many. All right, cut it down a little bit because they tend not to do so well. So that's one way how we've adjusted to trading these type of just really horrible market conditions. Why don't we start opening up to questions? Okay, so if you guys have questions or stocks that you want to look at, just go ahead and type it in the questions box. And also to go back to what someone said, as far as the website, do not go to profitcharts.com because that's actually a site where you have to pay a monthly service to get the charts that I'm looking at. But like I said, to get it for free, just go to Thinkorswim and just open an account with them, and then you can get it for free. So don't go to profitcharts.com, all right, because that's the paid service. So feel free to ask questions anytime that you like here, and then we'll just go ahead and start answering them. Okay, so moving on, I'll just continue talking, and I'll take in the questions whenever they show up. Even though we are having some setups for longs, I think it's also important to have setup or shorts. Also important to have setups for long, because that seems to be the story of the market, where you can short you can short certain stocks and make money, and you can go long on certain stock and still make money. That's just how this market is. So you have to treat each stock as an individual and not look so much at the market, because there are some pretty good stocks out there that I'm looking at to a potential long side if the market does decide to go higher. Let me take this first question here. BPACs. Oh, biotech stocks. You know what? When it comes to biotech, I really don't. It's so volatile that I tend to stay away because of the news driven. But do I think it will go back to $2? Probably not anytime soon. You can see it had a very nice, breakdown of this stock here. So this is going to be, I think, when it comes to these type of breakdowns on high volume, it's going to be down here for a while, unless, of course, there's some other news-driven event that will launch it up here. But from a technical standpoint, the fact that it dropped so much, I think it's going to stay down there. I mean, if you look at other technicals like this one, right, huge drop, and it's basically just going to flounder around down there. So I don't think that, at least, like I said, from a technical standpoint, I don't really see the stock climbing back up to $2, at least not anytime soon. Okay, gold. Let me see here. As far as gold, I guess someone talked about mentioned that a flight to safety. You know what? I'm going to answer that flight to safety. I don't think there's really such a thing as a flight to safety. If you think about it, there's really nothing that's safe. Okay, everything will come down eventually. It's just the law. It's the laws of nature, right? Nothing goes up forever, and gold has been going up for quite some time. I'm not saying it's in a bubble, but I'm saying that eventually gold will experience some kind of a pullback, some kind of a correction, and it seems like we're in the process or beginning process of that. So I don't really believe in such things as a flight to safety, because everything does pull back eventually. Okay, so when you hear that, you got to question: is there such a thing as putting your money in a safe haven other than under your bed? Okay, but I think yeah, it's one of those things where you just got to treat it as a regular stock. Don't think of it as gold. Just treat it as a regular stock, and look at this and say, okay, if this is don't even look at it as GLD. If this is just a regular stock and I see this pattern, would I want to be holding it anymore, right? Do I still want to be holding this stock? And especially, like I said, right, after breaking these support levels, most likely not. At least I wouldn't. I wouldn't be holding this stock. Okay, that's really what you have to ask yourself. Um, at least in 1 year. Okay. Well, I mean, best of luck. If you're talking about B packs and you expect to go back to $2. I mean, I'm not saying it can't. Like I said, I'm not saying it can't. But if that 20 cents is worth the risk, then go for it. It's not much. But I think from a technical standpoint, if you're expecting it to go back in a month or two, probably not. But hopefully you'll get that pop. My thought on Cisco. Okay. You know how okay, one thing I got to say about these old tech stocks is I don't really like them because, well, they've had their moments, right? If you look at a lot of these old tech stocks, they've had their moments in 2010, not 2010, uh, back in 2000, right? Like if you look at Microsoft, they had their moments and it's just really going nowhere. Okay, if you look at Cisco, I'm talking about Cisco, Dell, eBay, all these old stocks where they had their moment back here in 99, 2000, but if you look at most of them, they're just sideways for the most part. So, I mean, I wouldn't really do, it doesn't interest me. Now, if you want to buy or hold, I'm looking at this thing and I'm seeing potential head and shoulders right there, okay, or maybe even a double top. So I think you have to ask yourself, what is your ultimate goal with the stock? If your goal is a short-term hold, then if it breaks this 50 moving average, then I'll probably get out, right? You see how it's trading above that 50 moving average? If it breaks it, then most likely you can go lower on a short-term basis. But on a long-term basis, then you have to ask yourself, what is your ultimate goal for this stock? It came back to support here. And if you think long-term, it can come back to up here, then sure, then it's basically just starting to move higher. But you have to give in the market context, right? If the market does decide to roll over next year, I think it will drag Cisco down with it too. Which European banks would you short? I think there's one that looks pretty good is DB. Something about this stock. Most of these banks kind of look the same, but for the most part, I think DB hasn't exactly broken down just yet. It did have a nice breakdown, a nice pullback here, but I think DB has some more room to go as far as shorting. This is a European bank, and it's forming some kind of a triangle right there. So I would consider this as a potential short for Eurobank. All right, maybe a breakdown of this 32.5 area right there. FAS. Okay, what about FAS? Looking at FAS right now, not a whole lot to be done here. And about these ultra ETFs, I would not hold on to these ultra ETFs long term because they tend to decay pretty darn fast. Okay, so you have to ask yourself if that's something you want to do, because in the long run, these ultra ETFs, that's why they keep doing these reversal splits and everything, because they just decay over time. Okay, that's just the vehicle. That's just how they are built. And I would rather short or buy an individual stock, or if you do trade these FAS, FAZ type of vehicles, I would just go in really short term, maybe for a week or two. But I wouldn't hold it for anything longer because they just decay way too fast, right? I would much prefer if you do like an individual like XLF, where it doesn't decay as bad as these ultras like FAS or FAZ. Okay. But kind of going back to what I was saying, some stocks that I'm looking at as for potential long side, McDonald's, and this is a stock that on our forum, we've been talking about this stock, and you can see, look at how I guess how beautiful this stock is, right? I mean, it's trending nicely. It's actually going against the grain. It's moving higher. And I think this thing, if it breaks above 99, it can easily get up to 100. And it seems like McDonald's wants to head up to 100. So I would pay attention to this one if the market has any more upside. If it does decide to rally for these last 2 weeks left, I would definitely pay attention to McDonald's right here. Go for a quick target of 100. What else we have? Hansen. This is actually a stock that we issue as a trade alert. We did say to wait for some kind of a breakout above 97.5. Made a very nice comeback on Friday on really good volume. So something's going on with Hansen where there's definitely some buying interest that's going on with this stock. But it just needs to clear this overhead resistance. And if it does, again, 100. I like to aim for these even numbers like these century marks because they tend to attract buying or attract some selling pressure around these areas because they make for great support and resistance. Okay, another question. Which stocks to short or call or pay attention for this week or the next 2 weeks? Yeah, well, basically I'm going through them right now for the long side at least, right? For the long side, I think Hansen, McDonald's, even Visa. I think Visa is setting up really nicely. Okay, you can see how it's forming a base right here. So I like these type of stocks where it has a base, it broke out, and then it forms another base on top of this base, right? It's kind of like building its layers, building its levels. So I would say if it breaks out above here, well, what do you know? Again, it's a stock that I would aim for at 100. It seems like a lot of these stocks are approaching that 100 mark. So I would aim for 100 on this stock too, coincidentally enough. But also, if you look at these dollar stores like DG, DLTR, okay, Dollar Tree, they're setting up too. So I would also consider playing these guys to the upside. Flag pattern right there. So any breakout on Dollar Tree or DG, it made a nice pullback and it formed a hammer right there. So if it can get above that hammer, I would think that would be good. So these are stuff that I'm looking at. And even Google, I think Google's looking pretty good. Okay, this one you can either buy the calls or sell the bull put spreads. But if you look at Google, the long term, it's setting up really nicely. Actually, it's right against this resistance level. So if Google can break out of here, okay, see how it always failed around this area? Right there, right there, right there. Okay, and it's also stalling right there. So if it can break out above this area, it's clearing some major resistance. I think that's about the 630 or so, give or take. But once it clears this resistance, it can easily head back to 700. But of course, that depends on if the market behaves itself. So I would pay attention to Google as potential long side. It's one of the one of the few tech stocks that actually looks good out there. What else as far as longs? I still like GNC, but maybe if it clears that 29. GNC is one of those stocks. It's a new IPO, so it's going to be very volatile. Okay, so that's one thing you got to watch out for. It. A lot of these new IPOs are relatively new, I should say. They tend to be quite volatile. Now, as far as going into the short side, this is something that we've been actually we issued a trade alert on this on Apple. We actually did a bear call spread on Apple above here. And what I'm seeing with Apple is it's forming some kind of big head and shoulders pattern right there, right? Almost you can say even this is a double top right there. Or a two-headed, I like to call this a two-headed head and shoulders. But it's forming some kind of a pattern where if it does break down, Apple can most likely come back to the low 300s, maybe even 300 right there. Okay, so something to pay attention to as far as to the short side. Of course, Amazon always continues to be weak. Win. Easy PW. Okay, this is a pretty good stock to short. It's again one of those stocks that have led the market before for the last couple of years, and it looks like it's topping right now, especially seeing how it broke down from this little triangle right there. So if it does get some kind of a bounce back, retest this, then I would consider shorting it right around here. Or if it continues to base, then I would short there. Okay, you want to look for these bases because they tend to happen quite often, right? Just like with GMCR here, where it dropped and it formed some kind of a base and then it dropped again, right? It dropped, formed some kind of a base, then it dropped again. So EZPW, okay, it formed some kind of a base, it dropped. Maybe if it forms a little base, and it can continue dropping. So I would look for these kind of setups as far as shorts. So I mean, there's a lot of, I can go on and just kind of give you guys some more, but this is where you have to go through your own watch list and look at, okay, what stocks are weak? Like potash, that's definitely weak. Alcoa, that's definitely weak. Actually, Alcoa is not too bad if it forms this little triangle right there. Good shorting potential under 850. So there are still a lot of stocks that could be shorted. And at the same time, there are still quite a few stocks that can be bought, right? We're still in racks, right? Rack space looks pretty good for now. So you really have to pick and choose. I think the market it's that type of market where whether you play to the long side or whether you play to the short side, you're still going to make some money. But the main thing is you got to pick the strongest of the strong stocks to go long and the weakest of the weak stocks to go short. So that's why you got to be very diligent in picking the stocks, not just any willy-nilly, just pick any stocks. Yeah, someone asked about Baidu. Yeah, I definitely consider Baidu as a very weak stock because, again, right, it's one of those stocks that have led for the last couple of years, but now it's starting to roll over, right? It's formed this big head and shoulders right there, so it's starting to roll over, and you can tell, it's breaking down on some pretty good volume, right? Right, volume's picking up to the downside. These are clues. Are you definitely, if you're long this stock, you don't want to see volume picking up to the downside. You want to see volume go up as the stock goes up, but this thing is going down and volume is also going up. So that means the selling pressure is definitely there to the downside. Okay, especially since Baidu kind of broke this little base right there. So I would really consider if you want to hold on to Baidu or not, if this is something that you're holding on to, or if you still want to hold on to it, try hedging it or something. Okay, but I think in general these Chinese internet stocks, they don't look too healthy. If you look at Sina, right, continues to drift lower. Sohu continues to drift lower. Okay, so these Chinese internet stocks are also good potential to short because I think a lot of them are starting to show their weakness, or if they haven't already shown their side of weakness. It's just Baidu hasn't exactly fallen just yet, but I would definitely trying to catch it once it does start to fall. Anything else you want to add here, Chris?
Yeah, sure. We've been talking about a lot of the same stuff for maybe the past, I'm going to say 3 months, 4 months, even 5 months. And when we say a lot of stuff about the markets and this and that, it does get kind of boring. And when I was thinking about it, I was like, this is kind of boring. We're just saying the same things over and over. But I also forgot that trading is really kind of boring. It really is. If you're in this seriously, it's boring. I mean, if you're in the markets for entertainment and gambling, something like that, then it won't be boring. I've had other people say, but you're gambling in the markets. Isn't it exciting for all these ups and downs and things like that? And I had to say, gambler is someone who takes bets when the odds are against them. And it's really different from trading because we make bets on stocks, but we make the bets when the odds are in our favor. And we just continue to do the same thing, and we've seen this pattern before. We'll take it. We've seen this market condition before. This is the way we're going to act. And that's how serious traders trade in these markets. And yeah, it does get kind of boring. But I'm in this thing to make money. I'm not in this thing to have a fun, grand, and entertaining time.
Yeah, that's a very good point because, when times like this when you're really not trading, and especially if you are the type of person that's just staring at the monitor, you will find trades, believe it or not. I mean, that's just the nature of how it is if you stare at the screen long enough, you will find something or a reason to buy a certain stock, right? You'll justify saying, hey, you know what, this stock looks like it's setting up. But you have to get away from that. If there's nothing to do, if the market has no setups or if it's not going anywhere, step away. Okay? Step away, walk away, do something, go to the gym or go for a jog or something where you're not tempted to push that buy button or short button or whatever it is, right? And always make sure that you have a game plan beforehand. Each day, every single day, I go through my watch list, and what I do is I write down the stocks that are setting up or maybe has a potential to go short or long, and that's it. I just focus on those stocks, right? When the market's open, I place my trigger, okay, and if it hits, it hits. If it doesn't, then oh well. And that's really what I do. I just go through my watch list. Once the market's closed, I write down the ones that I want to pay attention to the next day, and I just pay attention to those stocks. Everything else I ignore because trust me, if you just cycle through your watch list day in and day out while the market's open, again, you'll find something that you will want to do something with, okay? And that's usually a recipe for disaster, especially in this choppy market, right? Even though you take little hits, or you say, oh, I'm just going to buy 100 shares, 200 shares, but they add up, right? If you get stopped out enough, they do add up, okay? These are like deaths by 1,000 cuts, right? You don't want that to happen. So just if the market continues to be very choppy, just kind of walk away. And you really have to understand you should really protect your money, and that's the main thing. All right, let me just kind of go through a couple of questions. Now, someone actually talked about Baidu as far as these lower shadows. You know what? I don't really put too much thought into it. I think the only reason why you see that is because it's coming back to this previous gap right here. So you're getting that bounce off of the gap just from a technical bounce. Nothing really, but we do see a doji probably telling us that it's going to rest a bit. Okay, dojis usually indicate that it could rest, but if it breaks down underneath this area, then we can easily see Baidu come back towards the 102.5 area. Case study with a stock. Yeah, you know what? I think if you want to do a case, yeah, sure. I would say, the stock that I'm paying attention to, like Hansen, okay, if it breaks above 97.5, we can consider aiming for 100. And of course, if Apple to the short side breaks down underneath on Thursday's low or Friday's low, then I would, not Friday's, Thursday's low, basically here. That's what I'm trying to say. If it rolls over, then I think we can probably see Apple come down to this area right there. So these are two stocks that I would consider if you want to do a case study, or if you want, just do a virtual trade, right? If you guys have an account or not account, just paper trade it and see how it turns out. Okay. Any
Yeah.
last?
Also,
Go ahead.
also on our the webinars that we do each week, and even to our members on the forums, we do tons of stocks, and we do look at case studies and we analyze a lot of different stocks. And we, if you're new, we still have that 30-day free trial to all the new members to check out, to take advantage of that.
Yeah.
And we really recommend people to share and what their opinions are of the stock and everything like that. And we all look at it and see what the best possible scenarios are or what has happened. And we do go in depth and what did we learn from that and things like that.
Yeah. So last thing, if you guys came from our meetup, obviously give us some feedback, let us know how we're doing, and we always take feedback, and so we always want to improve. So if you can either rate us and give us some comments, we would definitely appreciate that. And of course, you can follow us on Facebook. And like Chris said, if you want to know what we're doing and see some of the trade recommendations, you can do it for free, like a 30-day free trial. No harm there. But with that said, I think it's 11 o'clock, and I really do appreciate you guys for coming and taking your time off on a Saturday morning. And so with that, I think we can close it off here. And if I don't talk to you guys anytime soon, I really hope you guys have a great holidays and a happy New Year to all of you guys. And we can restart this market. Hopefully the market gets better next year in 2012. But if not, then we're definitely prepared for it. Okay, so we have some things we can do if the market does decide to tank. But all right, guys. Well, thank you again so much. I really appreciate you guys for attending. So have a great New Year.